There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way to
Tim Melvin, are you there?
I am here. Good morning, gentlemen.
How's it going?
It's going just fine down here in Florida, having a great day.
What's the weather like in Florida there?
Yeah, it's going to be 86 and sunny today. It's a little chilly.
86 and sunny is a little chilly. Yeah, we had 32 there in Detroit yesterday morning, so that's chilly.
Well, this is my favorite time of year because now I can just start sending everybody the local weather forecast. All my northern friends will get that every morning in their email inbox.
Thanks, we appreciate that, Tim.
I figured y'all did. So
but you sent it to Joe and Kyle, and who else?
That's your Sun report.
That's very good. Very good. So how are you guys loving this volatility this past couple of weeks?
We love it. I love the volatility. I'm a trader. I'm a day trader at heart here. So more volatility equals more opportunity.
Yep, I've had quite a few of my trading-oriented friends say that, it's finally broken out of the doldrums and there's stuff to do. They'd been falling asleep watching it just go up, 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 up. Of course, I really haven't noticed it very much. We're predominantly in the community banks, and the report on them every day last week was not much really happened today.
Yeah, well, you like that boring. That's what you're all about there, is trading those long-term boring plays. But those make money for you, Tim.
They do. They make an enormous amount of money, and you just kind of set me up this morning. There's a brokerage firm by the name of Stern Agee just came out with a report. About 2 weeks ago, and I got my hands on a copy of it. This thing's pretty cool. It tracks these small little community banks. There's small little banks that I love to own. And it tracks what happens when an activist gets involved in these things. And there's a bunch of activist firms around that specialize in small community banks. Now, they're not Carl Icahn, they're not Bill Ackman, they're not on TV with 250-page PowerPoint slides telling you, why you should buy or sell a particular stock, but they're pretty effective. Now, they looked at the last 10 years, and during that time, the NASDAQ Bank Stock Index has averaged a pretty decent return of around 17%. These stocks with an activist presence had a return of 49% on average from the day the activist took a position.
Wow.
Yeah, I mean, it's a huge outperformance. A third of them from once an activist filed, 1/3 of all these banks were taken over at a premium to the investment price.
Wow.
Clearly a sizable premium. So, I listen to everybody saying, what's Apple going to do? What's Google? I don't really care what Apple and Google are going to do, unless by some reason they should drop below book value. Because I'm down here, I'm, not having all the fun in and out every day that you guys are, but we're making a lot of money in these little banks.
Well, what little banks are you looking at right now here, Tim? Give us a couple tips here this morning.
All right, well, let me give you one that I just bought about 2 weeks ago, and that's Bank of California. Shockingly, gentlemen, that bank is out in California.
What's the symbol?
A BANC.
BANC.
Yeah. Now, this is just a little bank. PL Capital filed a 13D on these guys earlier this year. They own a significant, right around 8% of the bank. And they're, flat out, hey, guys, you're not running the bank well. You're not doing a great job. This is more valuable if you sell it. And PL Capital is run by two former bank auditors. They've been incredibly effective at getting deals done, forcing the banks to either dramatically improve performance and get the stock price a lot higher or sell in the bank. In this case, this is going to be a sell the bank deal, I think. And they, in their 13D, they sent just an absolutely scathing letter to management. If you have the time, it's worth going in and looking at the news filings and reading the letter. These guys aren't playing around. They're going to force a deal. And this thing's sitting here. It's trading at 82% a book, reasonable capital levels, very small loan losses, but they're just not making, as much money as they should be making. The bonus on Bank of California is they have a really nice dividend. It's 4.22%.
Yeah.
So
that dividend's safe, you think, there, Tim?
Yeah, I do. That dividend's fine.
So 4.22% for sit there and wait. That's not too bad.
No, that's not bad at all. I mean, last time I looked, CDs were what, 0.3% or something.
Yeah.
Where can you get that? No.
Joe wants
I think it's a 10-year deal, Joe.
Lock it up. So, yeah, this thing's shaping up technically, too. I see a couple highs here at 1170, 1173 from the last few sessions and sat up there. So maybe if you could clear the way, you get back over that 1180 and make a run at 12. Do they come out with any, targets of what they think the bank's worth or whatever, or are they just saying that they're not doing a good job and?
Yeah, you're not doing a good job. The bank's worth more. You should be making more. If we. Obviously, an activist investor, unless you're Icon or Ackman or one of the real publicity-hungry guys, you're probably going to not give a specific target, but. Figure the average takeover deal right now is at about 1.3 times book value. So that way, if you were going to set a target here, it'd be about 1850.
Tim, this is a pretty heavily traded stock for you here. I see it
traded. Yeah, the liquidity in this one keeps me awake at night, guys. I mean, I didn't have to make an appointment to buy the stock or anything.
Yeah, 113,000 yeah, that's what it traded. So, okay, anything else in the banking sector? Anything else that you've been waiting on? It's kind of, I know your charts, this one's a little bit different. Your charts, we usually pull them up. They're kind of just like sitting on the lows.
Yeah,
there.
This one's an actual stock that we can actually trade a little bit. He usually gets to see ones out by appointment only. You got a buy appointment only stock for us this morning, Tim?
Well, yeah, it's we've been doing a lot of interviews with bank CEOs that we've been posting up on Benzinga. And by the way, if you haven't read them, go back and read them all. I think there's like 6 of them up there. There's a universal theme in there when you talk to the guys actually running the banks, and it's kind of the same one I've been talking about. It's a tough business. The smaller banks gonna have to sell. We think that's just what has to happen in the industry. And the Fed actually at the BankStock conference, the Fed BankStock conference here a couple weeks ago, they kind of said the same thing. Hey, it's a tough regulatory environment. We don't know how you guys are going to do it. So you got the Fed and the CEOs telling you buy these banks. But anyway, Cape Bank in New Jersey. Here's a little buy appointment, a little $104 million bank. And I had a chance to chat with the CEO last week, and they are really expanding. They're in the Atlantic City area, which clearly has hurt them with all the casinos closing, tons of layoffs. Just the whole Atlantic City thing never really played out the way we all hoped it would, is the best way to put it, I guess.
What's the symbol on this one, Tim?
CBNJ.
CBNJ.
Yeah, and this guy, his shareholder list looks like the 1927 Yankees of value and activist investors. Joe Stillwell, he's buying another bank. He's buying a Colonial Bank to expand westward away from the shore a little bit. And that bank the one he's buying has 2 activists in it. He has an activist on his board already. EJF Capital is a bank stock specialist firm, and Michael Price of the old Mutual Shares is also a shareholder in this thing. So stock's sitting there, it's trading below book value, plenty of capital, great balance sheet, done a terrific job of disposing of problem loans over the last 4 years, and a bright CEO who's been in the business for 40 years and has started from scratch and sold 2 banks in the past. So he knows what he's doing. He's expanding towards that Philadelphia market. So you could actually see earnings growth out of this over time. So you might want to, consider making an appointment and buying some of this.
Yeah, looking at the volume on this one, pretty thin. Tim, I got just a general question here. I may have asked you this before, but it's been a subject of debate with some other guests. Rising interest rates, is that necessarily a good thing for banks?
It should be, okay, because it should widen out the spreads. The yield curve will steepen. It should generally an indication that economic activity is picking up as well, which ultimately is very good for banks. But yeah, rising interest rates should be less of a problem, let's put it that way, for the smaller banks than it is for many other companies out there, and potentially a net positive.
And then with all the Fed double talk lately, it doesn't look like rates are going anywhere, though, right?
I think I said this a few months ago, one of my first appearances on the show. The Fed is stuck. Okay, everything that they've done has been wonderful for those of us that invest in stocks and bonds. The real job creation picture, when you get out and kind of walk around and talk to folks, and how's it really doing? it's not that great. So their only plus is a higher stock market. And if they raise rates, the stock market's going to plummet. The worst job in the world right now is head of the Federal Reserve, because you're right. They're stuck. Rates are going to be low for a while.
Okay, let's move over to the oil sector a little bit.
Yeah, that's where the pain is, gentlemen.
Yeah, I know. I was
pain.
And I know you've been on this Hercules offshore, and I know it's been coming down. Looks like it's got a little bump on this one. You still holding on for dear life?
Holding on, and bought a little on the way down.
What's the symbol on this one?
Hero.
HERL.
Okay.
And, understand, gentlemen, I'm getting just blasted in names like Hero, Neighbors, NE, Rowan, RDC, the offshore drillers, getting clobbered. Drilling activity is clearly going to cut back if oil prices hold around here. Saudi Arabia and Kuwait have said they're willing to keep pumping. They can deal with the price being down here. I think Kuwait can. I don't think Saudi can actually handle sub-80 oil for a very long period of time without some problems. And they're going to get a lot of pressure from other members of OPEC to get this price back up. May take longer than I want to see. Oil prices will eventually go back up. We'll be drilling for oil again, and I'll sell these things at a profit at some point in time.
Okay,
so you're confident, like on this Hero, looking at this one, that this is going to be viable still? Because when I see a stock go from where it's at, looking at $7, $8, and now it's down to $1, it starts to get scary. Where I start thinking, is this in trouble? But you don't think it's in trouble?
No, they're going to have some problems, but the bond prices are telling you that they're not in dire straits. And they don't have a liquidity issue. In other words, they don't have any significant maturities out until like the 2018-19 period. So, and they are the dominant shallow water driller in the Gulf, so they should be okay.
And were you ever involved in Cliffs drilling? I remember.
Yeah, absolutely involved in Cliffs.
Did you get
out? Involved in it?
Sure. Remember, I've got a 5-year time frame. I've only owned it for a year. This is messy, and iron ore dropped a lot faster and a lot further than any of us really thought could happen. So this is a dicey one. I don't like dicey, but I'm not really willing to sell because I think the U.S. operations alone, in and of themselves, are worth more than the stock price, more than I paid, which is up around $11-12.
And Citigroup coming out here today and downgrading to sell too, so it's trading down here again this morning. It's down 30 cents at $8.45 CLF. It's been rough. It's been rough.
It's been rough. It could get rougher, but remember, that new management's only been in there, a couple months. So let's give them a shot and see what they can get done. But it's going to trade tick for tick with iron ore prices, which aren't going up anytime soon in a significant manner until management comes up with a plan to, let's say, rationalize the business and the balance sheet, maybe spin off some divisions and sell a few assets, and then we'll see what we have with Cliffs.
This dividend here on Cliff, is this...
It's gone. It's gone. It's history. They should have cut it last quarter.
So they haven't cut it yet, but you're thinking that's going to be gone. So don't buy this thing for the 6% dividend.
No. Matter of fact, probably the time to buy it is on the sell-off related to the dividend elimination. Walter Schloss was big on that, buying them dividend cuts, and it worked real well for him. And remember, in the regular deep value world, outside of the bank world, I separate my portfolios into piles. I take initial 1% positions so I can scale down. So these things pulling down, it ain't fun, guys, but it isn't hurting me bad either.
Tim, on this recent decline that we had last week, and we always talk to you about number of stocks in your universe, and when we were getting up there at all-time highs, it was kind of thin, kind of slim pickings. But on the sell-off, did your systems heat up a little bit, find a little bit more value in the market, or is it still, few and far between?
Yeah, what we got was, because this is not a significant decline, okay? I mean, we're right around 10% down off all-time highs. It was a healthy, good decline. I like seeing it, but I want more. Because what happened is nothing really came down into the value component except some energy stuff and two other little stocks. But a lot came to that, oh boy, we're almost there level. So we had like 250 of what I call perfect stocks, strong balance sheets, profitable dividends, good insider ownership, drop down to that 90 to say 110% of tangible book value. So they're standing on the cliff. They just need a good smack in the back of the head to go ahead and jump down into my neighborhood. So, we got a lot of, we're almost there, but only a couple of new pounce on them names.
If you had anything hit any targets, where you've exited your position?
No, not recently.
Okay. All right.
We're just not active. I mean, if we have 25% turnover in a year, that's a lot for us. We're not looking to get short-term capital gains. We want to own these things for 2, 3, 4 years until they're fully valued. That's really where the money is in this thing, for me anyway, because I'm a horrible trader. I mean, if I ever give you a trade, run.
All right, so just so we know what to do the opposite on the market. What do you think about the market here, Tim? We've had that rebound. Came out of last week. Fairly unscathed if you look at it. I mean, we're not that far from the levels we were at a week ago, considering the big decline. Now we're back up. IBM is kind of scared the market a little bit today. What's just your general feeling on the market here?
Well, I don't really make market predictions. My hope, gentlemen, is that it keeps going down. Okay, I really want to see another 10, 15% lower. I want to see this get into the point where people are puking in the garbage can under the desk and liquidating, and they're scared and they're getting margin calls.
Why do you want to see that?
Because then I can get my money to work into some super cheap stocks that will pay for that house I want down in Isla Morada when the little one goes off to college in 7 years. Okay, right. So I'm hoping it goes lower. When you look at the world, I'm kind of in that Sam Zell, Seth Klarman, Carl Icahn camp that says, guys, the economy and the stock market, the real economy, are totally disconnected, and something's got to give. I think we're overpriced relative to the amount of economic activity. That's offset by these very low interest rates. So I'm hoping it goes lower. I think certainly you've got situations in Europe that could push it lower. The Middle East earnings report, that's going to be huge for the next couple of weeks. That could create lower prices. So I'm hoping that's what happens. But I was also hoping the Orioles were going to the World Series. So
we were hoping the Tigers too.
Yeah,
That Kansas City team, wow!
I mean, right spot, right time. But I'm kind of in the camp that says 2 wild card teams in the World Series. This might be the end of time.
Who are you rooting for? Are you rooting for the team that took you out, or you just want the Giants to beat?
No, I lived out west, not in the San Joaquin Valley for a number of years, and my son's godfather was a huge Giants fan. We used to go to a lot of games, so I'm gonna have to stick with the San Francisco Giants.
Okay, Tim Melvin of the Deep Value Investment Letter, still combing the radars, trying to find bargains in the market. He's got one tough job, but he comes on pre-market prep, brought to you by Charles Schwab, and gives us his take on the market. We appreciate it, Tim. Hope to have you back on again soon.
Gentlemen, thank you so much, and have a great week.
Okay.
Thanks, Tim.
Thanks.